So what's good, YouTube? It's your boy Azaka FX. In today's video, we're actually going to be discussing something very important. Something very important. The reason you are not profitable, I can bet $100 that the reason you are not profitable isn't because you don't know when to buy or you don't know when to sell. You probably know more than enough. The problem is that you don't know when to do absolutely nothing, aka when to be flat. You first trade when there is no setup, you trade because you are bored, you trade because you feel like you have to make money today, or basically because you need money today. Everybody needs money at a certain point in time, but sometimes the best trade you can make is no trade at all. And in this video, I'm going to show you why being flat is not a sign that you are missing opportunity. It's actually one of the biggest skill separating profitable trader from what unprofitable ones. If you've not subscribed to the video, definitely subscribe. If you have any question during the course of this video, leave it in the comment section. And then if you have anything that you want to ask us, you can come to our DM. WhatsApp number is right here in the screen. Without further ado, let's go straight to what our inner cycle and see what we've done for the week. Then you would understand and truly grasp the importance of being flat in the market. And when I mean being flat, does your strategy actually have what it takes to tell you when to be flat? Does it? I know it tells you when to buy, I know it tells you when to sell, and it even tells you where your stop loss is, and it even tells you where your what take profit is. Then you scream use risk management, there will be losses in the market. What if I tell you that if you know when to be flat, when to stay away from the market, you just those losses you feel are in the market would actually no longer be there, and that in turn would put your strategy and your trading accuracy to more than 80% what you are presently practicing. Without further ado, let's go straight to our work for the week. Today is Thursday, and let's see what we've done since Monday in our inner cycle. Our inner cycle, this is on Monday. This is the Monday of this week, and we are active. Let's see some reacts, of course, to know if our people is actually ready or if anybody is online. I then said note to avoid over clustering the group with unnecessary messages. I will only be sending buyers signal and then trade guiding once we have entered a trade. And also this week we will be on both conservative and aggressive mode. So we have conservative models, which is the 95% accuracy signal. Ask anybody from this inner cycle. Once a signal is a conservative one, there's a good probability that it's going to hit take profit 95% of the time. Now, just because we said aggressive mode or model rather, just because we said aggressive model does not mean the signal is bad. It's not bad. Just that there's a good probability that all you are going to be getting is TP1. And does your strategy actually tells you that? My strategy tells me when to be conservative. It tells me that this setup you are trading is conservative, so hold this setup. This is a very good setup. It also tells me that this setup you are trading is an aggressive one. There are disadvantages. There are disadvantages to aggressive and conservative the model of trading. But that is not our essence today. Today we're talking about being flat. It may be one of the other videos that will explain which one is conservative and which one is aggressive. But for today we're talking about being flat. So apply risk management. Now this is how we actually started our week. By 7:32 on Monday morning, we've gotten our bias. And bias is XSS USD buy and USD XSS sell. So we are only to look for buys in gold and silver. This is the one for silver. This particular chart right here is the one for signal. So we got two signals on a Monday morning. And of course, I gave them the outlook. I said this silver outlook, this is just an outlook. This is not a signal yet. This is an outlook. It is valid, a very valid outlook, a very valid markup. Then I said this signal outlook applies only upon confirming a BOS on the lower time frame. If price fails to return to our entry, disregard this setup. It merely offers It's merely trying to offer a fresh bias, which is now no longer going to be this bias that we are working with. Remember, we don't predict, we react. So the market makes the decision and we react off of that decision that the market makes. And this is, of course, is the second trade, gold. This particular gold trade is what I used in the part 2 of our $2 to $100,000 challenge that we are currently doing. The part 3 will be coming soon, and you guys know that I only trade conservatively. This was a conservative signal. Both signals was a conservative signal. So I had that confidence that yes, it was going to take profits. Let's keep going. I then said keep a good eye on your chart. Gold is closed by now. This was at 1:22 p.m., which is basically the start of New York session. which is our main session of the day. We trade two sessions, being London session and New York session. Of course, apply risk management. This is confirmed signal. At this point, look, at this point, the signal is confirmed. The signal is still actually very, this was at 2:56 p.m. I dropped the signal and said still very valid for what? Entry. Note the rules and regulation. For those of them that is in the inner cycle, they know how well this rules and regulation helps them to be profitable. If you are not in the inner cycle, I'm not going to be showing you this rules and regulation. And of course, at 3:13 p.m., the trader started going our way. Here we go. This was all on Monday. And at 3:42 p.m., we've gotten to TP1. At TP1, you move, like I said, some of the rules and regulation. Do not try. See, I then told them, now try not to exit your trade prematurely at 3:55, because I know that in this inner cycle, once some people see a little bit of profit because of all the PTSD of trading that they've had, they start fear, the FOMO and all of that, and in turn, this reduces that risk to reward ratio, and on the long run, they'll find themselves not being as profitable as they were at what's supposed to be. So I assure them, if it is a trade that I will tell them to sell break even, I will tell them to sell break even. But in this particular trade, I assure them they should try not to exit their trade prematurely. This will reduce your risk to reward ratio on the long run. And then at 5:22 p.m., which is hours later, we were close to our take profit. And when we're close to our take profit like that, which is the first break of structure, I then said take off 80% of all your profit, and we cut 300 pips. So basically it means if you use the smallest, if this was a $20 account and you use the smallest lot size, being 0.01, you just made $30, bringing your total equity to $50. And I then said hold the remaining 20%. So that means a $20 account, you have to take 2 entries, right? So if you close off one, since you cannot close off 1.5, which is what you're supposed to do, if you close off one at $20, you are still holding $30 profit, which is the 300 pips that we are at now. If you close off one at 300 pips, $30 profit, you're still holding a $30, and now your equity is at $50. The other one, you can move to break even. Then I told them, let's see some reacts, next signal coming soon. Mind you, this was for the gold alone. The reason I focused on gold was because I was using it to do a challenge. The silver, this was on the silver trade. As you can see, the silver trade actually went very well. It went on our entry and all the way towards our take profit. Perfect trade, extra 400 pips, I think. I traded this on another separate account. Mind you, this was the signal beforehand. So this was the signal beforehand, and this is how it turned out to be later on. So most of them took this signal on their own. Now I said we're done for the day. Tomorrow we go again. Then I told them, when I say done for the day, I mean I won't call a signal again today. However, if you are still holding gold, ensure you close it by 10 p.m. today, which is the official end of the New York session. In this our inner cycle, we guide you. I guide you. I don't just tell whatsoever. At 10 p.m. yesterday, we exited at 450 pips. So that means if you had a $20 account, remember you exited your first trade at 300 pips, right? So bring your equity at, this is to total of $50. Now you exited at 10 p.m. your second and last trade that you were holding on break even at 450 pips, which is $45. 45 plus 30 is $75 plus your $20. That is $100+, or let's just say $100 total. You just did off of this one single trade, applying appropriate risk management. You just did $20 to $100 in one single day on Monday. That is good. Now we compound. Because this whole dollar now, this whole $100, you're not going to be risking it all in the next trade. You apply money management, you know that, okay, for my next trade, I'm going to be risking 20% of that $100. So by the time you calculate 20% of $100 or 20% of your entire portfolio, I don't know how much your portfolio will be. That will be what you'll be using to take your next trade. But if you are compounding like me for a conservative challenge, that means you are going to be going in with that whole $100. And even as you are going in with that whole $100, the way conservative trading works, you have to set your account in such a way that a loss would not even cost you more than $30. So at the end of it, even if you take a -1, or -2, you will still be very, very profitable. But then we did not take a -2. Let's go straight to what? Our next trade. This is our silver outlook, and the next day I said USD XSS sell, XSS USD sell, USD XSS buy. And after that was said and done, we got our outlook. As you guys know, note the pattern. After we get bias, I give outlook. After we get outlook, I wait for all my confirmations to be met. After all my confirmations are met, I then call the confirmed signal for the group. And then outlook, silver outlook, as usual. Don't forget lower time frame confirmation, blah blah blah. And this was still it. Gold outlook. This was the one for gold too. We trade silver and gold, so yeah, and they are the same family. They work side by side. They are heavily correlated with each other. And then finally, I got a signal, and then I said apply appropriate risk management. In our rule, it says that whenever you see this apply appropriate risk management, it's basically a reminder that says that yes, this is not a conservative. If it is a conservative, I won't even say this stuff. This is what an aggressive model. And just because I said it's an aggressive model does not mean that what it's not going to go well. It does not mean it's not going to go well at all. It basically means that there is a good probability that all we are going to get is what? TP1 from this trade. Always TP1. Sometimes it hits take profit, but it's not sure to hit that main take profit, which is all the way at 700 pips. 700 pips. Now I hold the trade with appropriate money management. I follow the rules, of course, follow the rules applied above. I always remind them to follow this rule applied above. And this was it. This was our entry. Beautiful. Another beautiful trade. Now that I being the mentor is a winning streak, of course, they know that. They know what I mean. And this was how the trade turned. This was at close to TP1. Close to TP1. Remember, I told you guys that we have two kinds of take profit. We have the structural take profit, which is what we are using here, and then we have the session take profit, which is what I told them to do in our format trade when I said that exit all your trade at what 10 p.m., which is the close of the what New York session, Nigerian trading session. It is yet another day to be active, consistent in our way. Like I said, the yesterday trade for those that closed some by 10 p.m. Nigerian time, which is the official close of what New York session, and had the rest on break even, which price came back. I actually posted it. I was actually planning on taking $4 to $100 with that one single trade, but unfortunately, it came back to take me out on break even. I did not lose the trade. I did not lose the trade because I was disciplined, and I still have my $4 account, and I'm still going to try again. Now, of course, this is now the essence of today's video. To this part, I said for now we are flat, no verified buyers yet, so we stay flat. And I said this at 8:17 a.m., which is the London session that we actually trade. But by New York session, we had what? At 2:08 p.m. by New York session, we now have our confirmed buyers being XSS USD buy, USD XSS sell. This is now where we go on to our what? Trading view chart, ladies and gentlemen. Our trading view chart, which is the important part. Why were we flat all throughout the whole of yesterday? Why did we not catch a trade despite having buyers? Now, in my analysis, the first thing I do after getting my buyers, remember, we're no longer dealing with the XY. We are now in our what? In our tradable. And in my analysis, I come here to what? This my daily time frame. And mind you, this is a fresh day. This happened yesterday, so we're going to be analyzing for yesterday. And so this is yesterday's candle. So that means we were working with what? The previous daily candle. This was a very simple situation. If I mark out the previous daily candle, which was yesterday's previous daily candle, the high being there, and then I mark out the low being here. I mark out the low being here. This is the candle that we are working with, mind you, this one right here. So that means this buy candle is what? Our yesterday's candle. So, and bias, actually we had a confirmed bias of what? XXS USD buy. So I was expecting a buy scenario from our yesterday's analysis, but as you can see, this is not the close above. This is the most recent external liquidity sweep, and I was actually expecting it to close above, but it did not close above. I came here to the daily chart. I said, please close above. Either you close above or you come and sweep the downside, so that I will know that I have what? A buy scenario. But unfortunately, yesterday market gave us a sell scenario. I did not sell. I remained flat. That is just one thing about me. If after confirming my bias analysis, I then come to my tradable, and on coming to my tradable, I realized that the bias analysis says buy, but my tradable is giving me a scenario for a sell. I will stay flat until everything aligns. That is one thing that your strategy does not do. That is why I can bet $100 that if your strategy tells you that if this thing is missing, stay away from the market, my strategy tells me up to the point of entry. That is why when I call a signal, there's that 100% confidence in me that yes, this signal will do. There's 90% to 70 to 95% of probability that yes, this signal will do. If it is an aggressive model and to the point of the confirmed entry, yes, I know that there's still 70% win rate that I have with that. If it is a conservative model, I have 95% win rate, ladies and gentlemen. That was just simply why I stayed flat. Simple. For that simple reason that on coming to our goal, our external liquidity did not give us a buy scenario, and buyers was actually saying that I should look for buy on a gold chart. I had to stay away from the market. Ladies and gentlemen, it's your boy Azaka FX. Our next signal is actually going to be a conservative one from the looks of what I saw in the chart this morning, just before I decided to make this video. I'm going to be giving you guys back-to-back quality content. And if you are in this channel, you must be profitable. I need you guys to tier entries. You must be profitable, ladies and gentlemen. See you all in the next video, which is going to be, since our, let me give you a how do I say it now? An explosion into our next video. Our next signal is looking like a conservative signal. It is a conservative signal, just that most of my criteria have not been met. I will explain that in that video, and that would be the part 3 of our what? $2 to $100,000. Part 3 of $2 to $100,000, where we are going to be taking our present $10 that we've gotten to. So we've gone from $2 to $10, which is what? That is an insane percentage growth. You don't know, going from $2 to $10 is equivalent of someone going from $20 to $100, which is what I did in that order, which is what I explained at the start of the video. It's also equivalent of somebody going from $200 to $1,000. It's also equivalent of somebody going from $2,000 to $20,000. So let you not think that this first part 2 of our videos we did nothing. We did a lot. And in the part 3, we're actually going to be going from that $10 to wherever the market takes to us next. It's your boy Azaka FX. Stick to this channel, you'll be profitable, ladies and gentlemen.